December is the perfect time for you to review what occurred this year, especially before the holidays come and then the new year. Things might get hectic in your life. And right now that it's fresh, you want to jot down and get pre-organized for the upcoming deadline. And this way, you stay in filing compliance with the IRS. The first part of the organizer is just a personal, what happened in your personal life, any new dependents, and any new births, any marital status change. Did you get married? Did you go through a divorce? All that matters. It's a legal change in your status. And if you have $10,000 or more in a foreign bank account, a foreign investment, foreign pension, you definitely have to do the FBAR FinCEN 114, which is the foreign bank account disclosure. And now to track your income sources. If you worked a job where you clocked in, clocked out, and you work different jobs, you're gonna get a W-2 from each of the employers of the different jobs you did work for. If you had any distributions of any IRA, pensions, retirement accounts, you're gonna get a 1099-R from each financial institution, and it could be taxable income. The code would be written on there. If you had a valid rollover, the rollover code would be in there. If you got a state tax refund from the state, it could be taxable, especially if you itemize your deductions, but you will be getting a 1099-G from the state. If you collected unemployment benefits, you will also be getting a tax form 1099-G from the state government. This is a big one. If you sold stocks, if you sold any cryptocurrency, you're gonna get a 1099-B from that financial institution. Make sure, now most of them, Robinhood, Coinbase, you are able to log in. And if you belong to some kind of crypto exchange where they don't give you a form, there's a couple softwares you could download, and it can download all the taxable transactions. Now, keep in mind, what becomes taxable is the moment you sell the item, the moment you sell the stock, that's the taxable transactions. If you keep buying throughout the year, the buying is not the taxable transaction. But nevertheless, the 1099-B would have all the different transactions in the forms we need for the taxes. So make sure you jot down what financial institutions did you sell stocks or cryptocurrency. If you sold a house or you sold or rental real estate, you're gonna get a 1099-S, and it's very big that we include this in your taxes. Even if you could exclude some portion of it because of tax law, or because we have to include bases, we still must include the sale and whatever exclusions on the taxes. So make sure you jot that down. That's a biggie. Don't leave it out just because you might think it could be an exclusion. Now, with the recession that occurred last time, there might be a wave of foreclosures, a wave of repossession of vehicles, so on and so forth, or credit card forgiveness. Those are actual taxable transactions. However, there are also exclusions that may apply. So if any of that occur, make sure you contact the institution, make sure that they have the correct address where they can send you the form. And normally there might be two different types of forms, a 1099-C for cancellation of debt or a 1099-A. If you had any type of winnings, any lottery winnings, gambling income, you're gonna get a W-2G, and it is taxable income. You are able to write off the gambling losses, but it goes on a whole separate part of the tax return. You must include the winnings on one side and then your gambling losses on the other side. And now for the business indicator. If you had no business, you could probably skip the section and go on to payments made. But if you did have some kind of business, then there's extra requirements that you must maintain. The first is know what type of business entity you did have. Were you a sole proprietorship or self-employed, content creator? And if you were, that goes part of your Schedule C, and the Schedule C is part of your personal income tax. But if you had an S corporation, C corporation, partnership, LLC, those business entities, you have to file a whole separate tax return for the business, and then the profit goes on the personal income tax return. The only exception to that is a single member LLC, which is treated as if you're self-employed, and it goes on the personal taxes only. If you start a business in 2022, there are certain expenses that you're not allowed to take. Instead, it gets treated like a loan where it's kind of amortized and spread out throughout the years. If you sold a business or closed a business in 2022, you want to make sure that that business is in compliance. That way they don't go after you personally and you close it off officially. If you happen to sell it, the business sale is treated like a house sale. You must make sure you account for the appropriate gain. And regarding business, there's several business best practices that you must maintain. You want to keep your business financial institutions such as your banking, your checking account, your savings account, your credit cards separate from your personal. That's business 101. And maintaining good records. Did you maintain a calendar system? Do you have a bookkeeping system? Do you have QuickBooks, Xero, a bookkeeper, an accountant? And you want to make sure that your systems are aligned in and you have your financial statements ready for the taxes. There are certain payments, deductions, and expenses that could reduce your taxes. The very first one is if you voluntarily made quarterly estimated payments or deposits with the IRS, here's the time where you include the total amounts in the taxes because of course it's dollar for dollar against the tax itself. If you're self-employed or business owner, you may have made this because it's required for you to make them every quarter. And same with the state income tax payments. If you made estimated payments to the state, make sure you keep a record and all this gets included on the taxes you did pay. You could do a Schedule A itemized deductions if you had any of these following. If you made mortgage payments, the interest you paid to the bank can be deducted on Schedule A. Medical and dental expenses are also deductible. Now, there are limitations to it, but we get the total amount and we might make the calculations on the tax preparation side. If you paid any real estate taxes on your home, that's also deductible. And certain state and local taxes are also deductible. We want to make sure that we include those, such as the vehicle registrations. A portion of that is taxable. Donations and gifts to charity are also deductible. If you make your tithings to your church, you want to make sure you want to start totaling that up for the year. And if you paid for any higher education for yourself or dependents, it could be deductibles. There's different ways to deduct it, so want to make sure you get organized. Now, the schools also send you a Form 1098 where it lists the type of tuitions you did pay. So this is a quick memory jogger for you to at least start getting the mind frame to say, I'm gonna file my taxes on time this year. Start gathering all my records. Now, just in case as a backup, all these third parties do report things to the IRS, but there are certain things that are not in there. Like if you're from a state where there's state income taxes, none of that stuff is reported on the W-2s, that's reported to the IRS. Now the quarterly estimated tax payments, that's reported on the account transcripts and we're able to get a record off that. And if you're a business owner, also some of these expenses just from whatever records that you have at home. So let's crush it. By April 2023, let's make sure that we get your taxes well in on time. And if you have any questions or concerns, please give us a call. We're more than happy to help you out. And we're looking forward to seeing your taxes done on time.